Fox, and we are in sunny Las Vegas, which is overcast today. I don't think it's going to be overcast all day, but it's beautiful right now. When I went out to work out this morning at 5 a.m., I came take an hour and a half in the fitness center. When I came back out, the sky was just gorgeous. Anyway, loving Las Vegas, and it is the first full week of December, and we have some interesting stats for you today. The median single family home price ended up at 435,000 for November. And that is what we started out in ended up in January with. We didn't start out in January with that, but we ended up in January with that because the end of 2021, it was still under 400,000. So took a big jump in December, and then ended up in January at 435,000. And so let's just look at that before we get into the other stats today, since we're talking about that first. So see, here we go. 435,000 was the median in January. And then it jumped in February to 450,000, in March to 465,000. And look, in May and June, it was 485,000. Then it started to drop. Interest rates went up. July 470,000, August 452,000, September 450,000, October 445,000, and now in November 435,000. So we shall see what we end up for the year, but I think that that's a very healthy sign. We know that the prices in real estate are localized more now than ever. It takes a lot of income to buy a home, much more than it did in the 70s. In the 70s, I think it was a third of your income, and now for the mortgage, and now it's way higher than that, almost doubled. So anyway, home ownership is declining in some. Homeowner occupied is declining in many markets. I did some research and I looked into the U.S. Census Bureau over the weekend, and would you believe, in Los Angeles, only 37% of the homes that are owned are owner occupied. That is a huge investor market there that is renting. Now in Vegas, what do you think it is? It's 57% of homes are owner occupied. I think it's dropping to 54. So don't have my note here, but I think it dropped to 54, actually, from 57 to 54 recently. So in the past couple of years. So anyway, the census is every 10 years, but I think it has dropped. But the point being that homeownership is dwindling. And the people that can afford to buy homes right now with the high interest rates, that's dwindling. So when you look at our stats and you see the quarterly recap of investor sales, which is in the lower right-hand corner, it says that we are maintaining a year-to-date daily sales to investors of 31. Now, I like to do the research on where these numbers come from, and some of those some people buy them like an investor or a second home, and then they change their mind, and we're not aware of that. So that 31, in my opinion, might be a little high, but we shall see as time goes on, because that's a big part of the market. Anyway, let's look at another interesting thing that happened over the weekend. The single family homes that we listed over the weekend was 127. Yes, just listed over the weekend, 127 homes. That is huge. Now, of those 127 homes, another interesting fact, and the trend is breaking a little bit, that's why I'm just calling it interesting, is that 51 of those 127 homes were the median price or under, meaning 435,000 or under. And for a total of 2,489 single family available homes in our zip code area that we use, We're 435,000 and under, which is 37% of our market, which is very healthy that it's that much when you look at how many the investors are buying. And then you go over to the right middle part of the chart, and you will see that investors are still I mean, not investors, I'm sorry, $1 million home buyers still maintaining 4 plus a day. Now, we started out the year at about, I think, 4.8, and we called that 5. Now we're down under 4.5, so I'll call it 4. But still, that is an amazing amount of homes. There's $903 million plus homes on the market today, and that's 10% of our market. So we have 8,720 available properties. So it's probably about 9%, but it rounds up. We have 8,720 properties available, and which is 128 days of inventory. And that's based on 68 per day, which is what we were doing in November. Now, if you go down to the next part of the chart, you will see the month-to-date sales compared to the same month last year.